Hi, everybody. Welcome back to another edition of VCTV with your host, Kyle Ellicott. Today, we're going to be talking about decentralized finance and the future of banking on a very important day in the crypto space, as we have a lot of news around potential Bitcoin ETFs that could come to approval today as well. And late last week, we also got news from DeFi Llama that the decentralized finance industry has reached and now surpassed over 200 billion with a big capital B dollars in total value locked, or TVL. A lot more as well. But before we get into today's episode, big thank you to the Token team, to Hasmik and Maria for making today's episode possible. With that, I'd like to introduce my co-host, David. Welcome. A little intro and background.
Sure, Kyle. Thank you very much. This is David Towell, president and co-founder of Prochain Capital. Prochain is a crypto-focused hedge fund. We are multi-strategy in the sense that we invest in tokens from large to small. We also invest in equities of companies that are involved in the Bitcoin, crypto, digital payment space, such as Square, PayPal, Visa, MasterCard, Coinbase, so forth. Lots of public companies, and I think there are going to be even more over time that raise their capital that way. And then lastly, we do have investments in venture stage companies as well. So we try to take a holistic approach to the asset class, and it's always my pleasure to be with Kyle, and certainly today after a little bit of a hiatus that we haven't been able to connect.
Absolutely. Well, happy to have you back. And let's talk about some of those companies you just mentioned. I mean, decentralized finance and the future of banking. Coinbase just recently announced, followed by Strike and a few others as well, around the idea of helping for individuals to bring their paychecks onto the platform and invest that into cryptocurrency or convert it into cryptocurrency. We're seeing more of these types of initiatives, along with payments and banking applications coming around as well. USDC just launched on the Hedera network today, helping to bring a stablecoin, the first stablecoin to Hedera as well. What else do you see that's happening in decentralized finance that might be applying to kind of re-outfitting the banking industry as we know it?
So just do me a favor. Let's place a bookmark on stablecoins for a little bit later.
Done.
Because I do think that it requires its own conversation. When it comes to decentralized finance, and lots of things that are going on right now with respect to regulation, I think we're going to have to temper our dreams about pure decentralization and essentially come to terms with the fact that there is going to be some form of centralization. And, I think that that's not a bad thing. I think we can find a very happy medium. And, the fact that the likes of Coinbase and Andreessen Horowitz are taking a proactive approach, I think is very important. I don't think that the regulators in the United States and probably elsewhere in the developed world are going to let decentralized platforms run independently without any regulatory oversight. In the regulators' mind, they have little to gain by allowing that to happen and everything to lose. And so I think we will see some of these decentralized players and forces come into a more centralized and regulated environment on the one hand, and then on the other hand, we will see the likes of companies that are already regulated and are already, quote unquote, in a sense, centralized, become much bigger promoters of what effectively is a decentralized world. So the likes of Square and PayPal, and Dorsey's recent statements about what he wants to enable users to go ahead and do is spectacular. And the fact that Coinbase, in some senses is a regulated entity, it may be carrying some unregulated tokens, and so therefore coming under considerable fire. but at the same time, enabling people to go ahead and deposit their money, on a direct payment basis from their paychecks into a Coinbase account and invest it in cryptocurrencies, is an important development. And it may not help so many people in the developed world, but certainly as things like this become, um, an acceptable activity in other places in the world, certainly this will transform. I don't want to sound so revolutionary, but in some senses, transform lives of people, that frankly don't want to be invested in their hometown currency and would prefer to be invested in something that is much more worldwide and potentially stable than what they are generally forced into accepting in terms of their payment for their hours worked. So I think we're going to have to watch, as these worlds start to really mesh together, and not to go ahead and throw cold water on the entire, I'd say, DNA of crypto assets and the decentralized nature of them. I just think that there are forces that are justified and there are forces that are very strong that are going to go ahead and, at the very least, bring those decentralized wild spirits into a little bit more of a, set parameter, although albeit wider parameters than what we have today, but nevertheless set parameters so that people of all stripes, of all, not only users, but regulators and other folks that, are involved can be comfortable, with the risk and rewards that the sector provides.
And I want to go back. You mentioned the word stable. We put a bookmark in stable coins. Let's talk a little bit about those. There's a lot of conversation, especially around regulation right now. We've got the back and forth with USDC coin and USDT Tether, and some other stable coins that are starting to come about and also provide additional services, whether that's yielding or future earnings. Talk to us a little bit about what you're seeing around stable coins right now, as that also applies to DeFi and banking.
Yeah. So to me, stable coins as they have existed, and maybe in a sense as they currently exist, um, the money to be made in them is going to kind of go away. It has to go away, because if all a stable coin is a commodity, essentially an on and off ramp, for a lot of, I'd say, use, or drawing against the value of underlying cryptocurrencies, there really should not be a lot of money or delta or spread in that type of utility. It's a commoditized utility, and it's really just an ability to reflect value or the taking of value, from an underlying asset and be able to go ahead and use it in some way for transactional purposes outside of the crypto ecosystem per se. I hope I'm making sense. So, um, what's existed until now, I think from a traditional finance standpoint, for people that have traditionally been in finance, they look at, um, what stable coins have been, the way they've been structured and what they've been used, and it leaves traditional finance people scratching their heads saying, I don't get it. It's essentially there's a lot of vague, backing going on here. We don't know exactly what's behind this. There are statements being made. It's like saying, like, made in America. Meanwhile, 1/100th of the garment is made in America, and the other 99 parts are made in other places in the world. Same thing for proclamations about ESG. Same thing for proclamations, about racial diversity and so on. I mean, you can feign it, and it seems like a lot of these stablecoin providers have been feigning it in some way. And listen, they can satisfy their conscience by saying, okay, we don't have all the backing, let's say, in cash. Maybe it's in some other types of securities, what we think are considered liquid securities. Maybe there's a manageable level of leverage, but at the end of the day, and they're saying, there's never going to be a run on the bank. And in fact, yeah, there isn't a run on the bank until the day there is a run on the bank. And then everybody's in trouble, not only the stable coin, but it becomes a systematic problem. And the size of the stablecoin world has grown to such a point where, yes, regulators need to be concerned about this, because if not only are the users going to get hurt potentially if there, isn't proper backing, but it could create systematic risks. And so, to me, it's just going to be a very quick race on this. I think what happened with Tether, so they paid a fine, but
41 million, I think it
yeah,
was. Yeah.
It doesn't it doesn't it doesn't solve the problem, which is these stable coins. Like I said, there's no innovation other than the technological innovation, which is very important. There is no financial innovation in them, right? There shouldn't be any financial. They should all be exactly the same in some sense, right? You shouldn't be taking a gamble on which stable coin is more stable than the next one. That's not the point. And
Right.
Unfortunately, it seems like right now there are gradations of stability in the stable coin market. And that's just, it doesn't make any sense for purposes of really what it's essentially supposed to be doing for the crypto world. So I think that that's one of the easiest things to fix. And because it's so easy, I expect regulators are probably going to spend the most of their time on that because it's a fixable thing. I think the other problems or the other issues in crypto land are much more complex, much harder to solve. It's not a one trick simple answer, which I think it is for stable coins in terms of this is what you need to hold. This is the liquidity of that which you need to hold. Your pie can be made up of XYZ, alpha, B, DC assets, and you can't go outside of those parameters. To me, that's kind of simple. So I think that regulators will go there first. They'll correct that first. I think it's a good correction that it needs to be had. But I certainly believe the rest of the sector, when it comes to, let's say, DeFi related, currencies, tokens, and whether they're securities, and then the exchanges that trade them, whether they need to be regulated exchanges. I think those are much more complex issues. And thankfully, Coinbase and Andreessen Horowitz, and probably a lot of other folks that I don't know, are currently working on solutions, because that's I think the crypto world is smart enough, not just technologically and geeky, but also in terms of understanding how we're going to go ahead and get to a good framework quickly. It's only going to come on the basis of proactive, movement. Not to say that, regulators and legislators are certainly going to fall into line. I hope that they listen and not, come back with an attacking nature, but it'll be time. And I think, frankly, a lot of the next 12 months in terms of, airspace in the sector is going to be taken up with regulatory, related activity. It may not be a daily occurrence that we'll hear something, but it's going to be, we're now into the heart of things. And it's part of the growth of the sector. It needs to happen. It needs to get completed. We will all wait and watch and see if, Coinbase's request for a single czar of crypto gets answered, or no, there's going to be, your typical political tug of war that's going to happen between the SEC, CFTC, and other, regulatory bodies, inside of the administration.
Right. And as we look towards growth and closing thoughts today, David, what's your prediction of where DeFi goes from here over the next year? I mean, we're at $200 billion again, according to DeFi Llama, in total value locked, up from just over $1 billion in May 2020. That's a short amount of time to see that type of increase in value within an industry so rapidly. Where do we go from here? Where does decentralized finance, in your opinion, go? And then where can everyone find you online to continue the conversation?
So to go ahead and just draw analogy to other regulated sectors in the economy, take something such as, healthcare and pharma, or take something such as telecom and communication, right? Where some of the, channels or access points are controlled by regulators, and therefore the sector cannot go ahead and in a major way advance until those regulatory questions are answered. I think that is the opposite of what goes on in crypto assets. Not to say that the crypto asset developers are anarchists. It's simply because the development and the activity is going on at a breakneck speed. And if it's not going on to be applied here in the United States because of regulatory concerns, it's being developed for it to be applied in places where it can be applied immediately today. And so I, as an investor, and I think that this might, be, your question, I would continue to pour money into the space because the space is going to continue to grow, continue to advance. Now it's just a question of, at some point, the regulatory framework is going to be defined, the gates are going to open, and the flood is going to be even stronger than it would have been, 12 months prior if the regulatory gates had come down. So frankly, the value is building up, even while the regulatory questions remain. And I don't think that is the case in most other industries that are heavily regulated. So, I'm excited, encouraged. I don't think that, anything is going to particularly slow down. From a day-to-day pricing perspective, we may need to go ahead and watch the fits and starts, but we're pretty used to volatility in this space anyway. So I don't think that that's going to abate. But nevertheless, I think over the longer term, the value will continue to grow exponentially.
Wonderful. Thank you very much, David. And in your closing thought today, ETFs. Apparently, there's a Bitcoin ETF. ProShares is coming out tomorrow. I just read now, breaking news on Twitter. We may have some more. It's still early in the day. Some of this is still coming out. There's other regulation information that's coming out around lending and yielding products too in the state of New York. I just saw come across the screen. But Bitcoin ETFs, in your closing thoughts, what are your thoughts on these? Where we go from here, and where can everyone find you?
Before I answer, before the end of the week, how many do you think are going to be trading?
I'm gonna go +4. Okay. I'm gonna give 4 plus.
I'm gonna go with 7.
Oh.
And let's check back in
Deal.
a week from today.
All right, week from today to the audience. I said 4 plus. David's got 7. So somewhere in between, one of us is going to be right, or we're both going to be wrong. But we're thinking 4 and 7. All right, I like it. We're checking in a week.
I think that the outcome from a substantive standpoint, volume and so forth, I don't expect it to be massive. If Coinbase's IPO, not to say that it's a direct analogy by any stretch, but I think the anticipation is great. I think the hype is great. But more than anything on this event, if we have 7 this week, or even we have 4 by Kyle's number, it's going to make a headline every single day. And to me, that's the most important thing. I want to make this so simple, but people will laugh. The technology works. We get it. Granted, there's a regulatory question about how this is going to be policed, but we're all sure that the technology works, and we all agree that if the technology is able to function the way that it's meant to, it leads to a net benefit or benefits in the end. So now the question is adoption. And to me, adoption is just a marketing campaign. And certainly, you and I, Kyle, and lots of other people who have appeared on, your shows are, I'd say, earlier adopters. And now it's a question of who adopts next. And the more front page headlines that this sector continues to get, the more adopters that will come along. with these futures ETFs, my hope is, yes, retail, investors are important, but if futures ETFs allows more institutional investors to get invested because of issues of, custody risk going away, and now there being a regulated financial instrument, which, they can't be questioned on by their risk committee in ways that they could be if they invested in, actual Bitcoin. That's great, right? More adoption means increased value, more holders, so on and so forth. So to me, that's really what this boils down to. It's less about, how much trading there's going to be in these futures ETFs. I'm expecting some very conservative amount, not incredible numbers. I mean, the numbers, that we've seen, yes, Grayscale, has an incredible, amount of capital in GBTC, but the trading volumes, let's say in the Canadian ETF for Bitcoin, not a futures ETF, and Switzerland, I mean, they haven't been eye-popping. They haven't transformed the world. All of the Western world's capital that wants to be in Bitcoin has not traveled to these jurisdictions, so to be invested in those ETFs. So I don't expect there to be this massive, uptick. It may happen over time, but to me, in the shorter term and the more substantive aspect is just the marketing campaign and the adoption generally.
Thank you very much, David. 4 and 7. Remember that, everybody. We'll be checking in 1 week from today. David, where can everyone find you and Prochain Capital online to continue the conversation?
Sure. You can find me on Twitter at David D. Towell. And you can also find me on LinkedIn.
Wonderful, David. Thank you very much. To our audience, thank you so much as well for tuning in. If you like what you heard, click like, share, and subscribe on today's episode. Please reach out to David and myself. We would love to hear from you. If you're building anything in these industries and surrounding, please do add context, where you heard us, where you met us, and what you would like to continue the conversation about. Big thank you to the Token team, to Hasmik and Maria for making today's episode possible. I'm your host, Kyle Ellicott. Check out David on Twitter and Prochain Capital as well. With that, everyone have a wonderful day. We'll see you back here tomorrow. Take care, everyone.
Thanks, Kyle.
Thanks, David.